It's COVID all across the world. Really, it's spreading faster, the Delta variant, and that's brought about a change in a bunch of asset allocation strategies, I would suspect. Good morning and welcome to the Trade Setup right here on BloombergQuint Live. The COVID updates first. The Delta variant has pushed COVID hospitalization in the US to 6-month highs, and the cases per day in the US, I think, have topped the 1 lakh mark. So that is the update from the mother market, from where all the fund flows emanate, and that's why US is important. Otherwise, human lives across the world are as important for all of us, right? But from a markets perspective, what happens in the US takes center stage. Goldman has slashed China growth forecast on the Delta virus outbreak, so that is part two. And I think as a result of all of that, commodities at large, and crude in particular, has fallen. For crude, it's been the worst week since October oil, since October last week, and it continues to fall. I think there was a 3% downtick in yesterday's session as well. So you remember that upstream argument that I was making, and maybe I also didn't envisage, but I actually thought that with crude prices slated to go higher, everybody's predictions were higher, that upstream companies should be bought into. Well, I think that scenario is on pause for the time being, for sure. So that's the long and short of what's happening as far as COVID goes. Now, the world markets and the US markets are a ho-hum. I mean, they didn't really crack too badly. They were kind of quiet. NASDAQ marginally in the green as well. So in all of that, no great shakes. And in fact, the futures, the last time I checked, were also very, very flat. But the point is, viewers, that the question as an EM investor, as an Asian investor, to ask is that can the trend of the last few months, and particularly since the month of mid-June, change? Now look at this chart, right? These four charts, and some of you might be knowing this, but I'm just bringing it out. If you look at the top two, which is the S&P 500 and the Stocks Europe 600, they've had an outperformance evident since the start of the year. No problem there. The key is the gap has yawned quite significantly since the month of mid-June. From mid-June on, despite the dips that might have come in, the gap is certainly yawning ever so widely. And India is not specific out here, by the way. The MSCI EM pack, MSCI Asia Pacific pack, all of them are there. And viewers, I would urge you to I would take you back to the conversation that maybe all of you should hear. Look at, try and hear Manish Dangi's interview that we did on BloombergQuint a few days ago, wherein I think he makes this point that India and some other EMs have no business to really trade as highly as some of the developed nations, simply because they're able to contain COVID better. The balance sheets are stronger, and therefore those markets will get higher valuations. So it's evident in the charts as well. Well, be that as it may, bring back to the present. Flattish market for the US side. So Asia is not showing really any major cues, and I doubt that the SGX Nifty will really do something materially different. We might have a start which is 0.5% up or 0.5% down. Actually, not even that. Very, very flattish. And unless the futures in the US side really show dramatic movement, you'd probably expect to meander around these levels. Remember, we are now well and truly above 16,000. What's the trade setup? Before the trade setup, let's take a look at what happened in trade yesterday. And frankly, I think individual portfolios bled, and it's evident by the way the market breadth was. 159 advances to 339 decliners. Sure, as in any given day, there were gainers, and some of the stocks did well. But look at the losers. Some of the commodity names, Nalco fell 12% after the earnings disappointment, and SAIL too corrected a bit. Some of the pharma companies corrected. Venki's down another 8%. SAIL, as I said, down about 5%. Hindustan Copper about 4 or 5%. So a bunch of stocks fell off. In fact, most individual portfolios would have had more red than green, and that was the nature of the trade yesterday. Now, I reckon that commodities will stay under pressure, and therefore the focus shifts to BFSI for now. If you are a bull and if you believe that the index could do well, which a lot of people do, CK Narayan does, then I think the focus shifts to BFSI for further gains. I just somehow think that while commodities will be under pressure, the current bout of long unwinding, and we saw severe long unwinding yesterday, maybe there could be some short buildup, but I really doubt that. So this bout of long unwinding will ease. We'll probably not see the same breadth of corrective moves in a Nalco, in a SAIL, etc. They may correct for a day or two or three more. I think at some point of time, simply because the deleveraging and the kind of cash flows that these companies are making especially SAIL, especially JSPL, JSW Steel, etc., you might actually see that bout of long unwinding easing off a little bit. It's a very interesting day for Zomato. It's the first quarter earnings to be released today, and it will be watched out for. In fact, viewers, it's a very crucial week, as I was saying yesterday, for some of the QSR food delivery consumption theme, right? Zomato, Mrs. Bector's, Burger King, McDonald's or Westlife, all of them come out with numbers. What they say about how the month of July thus far and August thus far have been would be very, very crucial for what these stocks do in the times to come. So do watch out. It's also two interesting names coming out with IPOs. I frankly have zero views here, viewers. Chemplast, Sanmar, and Aptus Valley Housing Finance. Frankly, I must tell you, maybe the subscription could do well, maybe the companies could do well, but I spoke to people who track IPOs for a living, two of them, and they had precious little to say about these names. So if you are indeed investing in these names, I'm not saying don't, and I'm not saying do. I'm no one to advise you, but I can merely tell you what other people are saying. If you are indeed investing in these names, please do your homework very, very carefully before you go out and invest money in these. So remember, IPOs are not necessarily the only ones to invest into. There are a bunch of secondary market stocks available at very decent valuations. So when names like when these are out, and they might be good quality names, I don't know, but you got to be careful. You got to weigh in the options available for you at the other end before you go out and buy. This is coming in from people who track IPOs for a living. Now, stocks to watch out for in the session today. Well, I think the stock of the day will be HGS, or Hindustan Global Healthcare Global Hindustan Global HGS. Sorry, I got tongue tied out there, but they're going to sell the healthcare division for an enterprise value of 9,000 crores. Now, this is this is happening. So, in dollar terms, about $1.2 billion, and at 1.2 billion, it is slightly higher than what the street was working with. So you have to keep in mind that Hinduja Global will be a stock in focus. This business contributed approximately 53% of the consolidated revenues for the company, and the current market cap of Hinduja Global is 6,435 crores. So that's interesting that they've sold one division which contributed half for an EV of 9,000 crores. I think this should be positive, simply because forget everything else, forget the math also. The expectation, and this deal was out there in the street, a lot of people suspect that this will happen, or kind of were forecasting that something like this could happen. But the expected value of this deal was about $1 billion. It's been done at $1.2 billion, and therefore I believe that there could be some more traction. Keep in mind, the stock has rallied a bit ahead of it. It was at 2,400 about a month and a half, 2 months back. It's now at 3,100 or thereabouts. It's not as if a stock has not rallied, but just because the deal has been done at a slightly higher valuation than expected, I think it could do well. So do watch out for HGS. The insurance, okay, let's bring up the chart just once. Yes, look at that, right? So forget from April. I mean, but what I'm saying recently as well, as start of July, it was at sub 2,500, 2,400 or thereabouts. And from there, it's risen to about 3,100, 3,075. So keep that in mind. Insurance trends, the private players, individual WRP and the AP growth was pretty strong. Now, look at these numbers and look at the numbers for SBI Life for the month of July. For the month of July, by the way, robust 52% YOY growth, and the 2-year CAGR is about 14% for the month of July. Remember, these are July trends, by the way, viewers. So SBI Life 52%, ICICI Prudential 25%, HDFC Life 18%, Max Life about 5.6%. So Max Life didn't particularly have a great growth. By the way, LIC declined about 4%. So keep in mind the privates are still continuing to get a notch up on LIC and the PSUs, but SBI Life a phenomenal month of July for that one. Now, lest that you be confused with these numbers, let me get you the Motilal Oswal view on these companies. So the WRP or the AP growth almost similar. Motilal Oswal says that with the continued easing of restrictions and the opening up of the economy, they expect a strong traction and they prefer Max Life because of the valuations, and ICICI Prudential, I reckon, because of the valuations as well. Interestingly, SBI Life, which was preferred to HDFC Life on the valuation front, has now narrowed that gap a little bit, and which is why I think, despite the strong growth, Motilal is going for ICICI Pru and Max Life. So do watch out for the insurance companies. It's been a good month, so some of these might react. Shree Cement, really nothing. I'm just bringing up the numbers because it's a nifty name, but exactly in line with estimates. And I looked at the brokerage notes. All of them have a steady state rating, no big upgrades or downgrades. So don't expect a big reaction from this one. Indian hotels, I thought the numbers were slightly weak. So revenues at about 344.5 crores. The estimates were 370 crores. EBITDA loss at 149. Estimated loss was 60 crores. Net loss at 301. Estimated loss was 190 crores. These are not, of course, Bloomberg estimates, but street poll estimates, of course. The board has approved fundraising of 250 crores through debt. And the company said that the only good thing about Indian Hotels numbers is the commentary that came in post the numbers, wherein they've said that there is considerable progress seen in the quarter and it accelerated significantly in the month of July. So with the economy opening up, could that be positive? Are there negatives in the price? That's the question you got to ask. But yeah, the numbers on expected lines were not the best. Some other stocks in focus because of the numbers. Shabby, I thought the numbers were okay. Positive EBITDA versus loss YOY, and a 23% uptick on the EBITDA front on a quarter-on-quarter basis. For Timken, EBITDA up 6.5 times YOY, 7% QOQ. See, YOY, everything will look good. That's why I'm getting the QOQ comparison as well. GSPL, I thought the revenue picture was mixed, but the profit after tax up 130% YOY, up 20% QOQ. So you really can't fault too much for a GSPL numbers, even though the revenue was a bit mixed. But I think the bottom line performance was pretty strong. So maybe some of these stocks react. If they do, you know why they are reacting. Quest Corp, cat out of the bag. Yesterday, a big deal happened. Small cap world fund bought 41 lakh shares, but the promoters have sold. So Ajit Isaac is a promoter, and Fairbridge too has been classified as promoter. So the promoter entities sold nearly 50 lakh shares yesterday at about 900. The stock was flat about percent and a half. So no big shakes yesterday. Maybe there could be a bit of a reaction today for Quest Corp. So do watch out for this one. Lastly, and of course, some brokerage names. I think the one that stood out for me was Credit Suisse upgrading Thermax to an outperform or a neutral from an underperform, one of the two. And therefore, watch out for Thermax individually. Otherwise, in the brokerage notes as well, at least I didn't see anything really great until now. Last but not the least, before we wrap up, what stood out for me, and a bunch of guys have been saying this, but the former Australian Prime Minister Tony Abbott saying that the answer to almost every question about China is India. It's perfectly placed to substitute China in global supply chains. This is somebody who's headed Australia saying this as well. And for an Indian investor, this should be music to the ears. Though I must tell you, before we wrap up, tomorrow, at some point of time, we'll be putting out a Russell Napier interview. And Russell Napier's observations and thoughts on what could happen to India flows took me by surprise when I recorded the interview. And when we play it out, it might take you by surprise as well. It's an interaction you don't want to miss. We'll, of course, highlight this tomorrow as well. But yeah, I think the whole situation around China plus one and India benefiting looks interesting. Thanks so much for tuning in, viewers, today. Stay safe. If you're stepping out, please stay masked up. Have a great Tuesday.